So I will talk a little bit, trying to convince everyone why investing is important, and sharing a little bit my personal experiences and a little bit the knowledge I have about investing, you know, and also explaining what I do and why am I doing it. So if you both know that I was creating program for kids and teaching kids about finance, business, and economics. And this is something which I really enjoy doing. So, and I also realized that I really like teaching. And since I was doing that, I was talking to lots of people about education, about necessity of current education, and lots of people and lots of women commented that they wish they understood more finance through their childhood. And also talking with many people, I noticed that lots of women have insecurities about finance and have their concerns and doubts, and it actually affects them on different levels. Women entrepreneurs, professional women who were always commenting that finance is something they wish they knew and they wish they would be more comfortable around, but they are not. Then personally, I've been investing for some time, and since when I started doing my MBA 2005, 2007, I realized that investing is very important. And from that moment, I was looking how to invest, and I experimented with some things. It wasn't easy. I made some mistakes. I had, after making some mistakes, I was very reluctant and didn't know how to start. When I started, I realized that as an investor, you really fight a lot against yourself. It's a very interesting psychological experience. And that's why now I offer this program, and I try to have a community supporting women to start investing. I think to start is the most difficult thing, and it's very difficult to understand what is around, what is it for you, and I try to explain and to clear doubts for many women about it. So some of the reasons we all talk about why we shouldn't be investing. No? So, one is that we don't have enough savings, maybe. Also, we're connected that investing is risky, so I don't have enough money to risk. I need more knowledge. This is a very valid one. No? So we need more knowledge to invest. Some people say I'm fine without it, and others say, well, I actually never thought about it, and it's actually not something for me. And I just want to address one issue. We think that investing is risky, and we all know that with investing we can lose some money, but it's actually that without investing we are guaranteed to lose money. Our savings are being destroyed by inflation, and though it's not really visible, it's not noticeable, but any money we have is disappearing due to inflation, and it disappears pretty quickly. So here you can see how savings of 1,000 euro disappears in 20 years, or diminishes, let's say in 20 years, it diminishes to 640 euro. So a person who in 97 had 1,000 euro, in 20 years, 2017, only has money worth 640 euro. And that's really a lot. Now it's, I mean, it's not half, but it's actually just slightly more than half. And these are numbers for Spain. The real numbers of inflation in Spain, but it's actually very similar to other European countries. I compare it to the Netherlands, which seems a country with a more stable economy. It's still the same. 2% is the average inflation in all European countries. So this is how our money diminishes in 20 years. So if any savings we have today, if we think that we might need them in the long term, there will be really much less money if we are not investing. And interest on saving accounts is very low. Now it's not existing, but interest on saving accounts will always be below inflation. So we always will be losing money if we just keep them in our saving account. And then what is good from the investment and why is it working? It's because we have something as a compound interest, and compound interest really works in our favor. And again, this is also something quite invisible, but it's quite noticeable in the long term. So I will show a little bit how it works. So imagine we have $1,000 or euro growing at 10% annually. I use 10% because then the numbers are rounded and it's easier to follow. So of course, 10% from 1,000 in the first year would be $100. So our interest we receive in the first year is $100. The following year, we will be receiving 10% already on the original amount plus the interest we earned in the first year. So it will be a little bit more. It will be 110 and not 100, which we had in the first year. And in that way, every year our interest is growing, because it's a little bit more and a little bit more, because it's always 10% on the whole amount if we leave this money in the same place. And though in the beginning it's pretty irrelevant in a way, with the time it really grows. After 10 years, the yearly interest is already $260 or euro. So it's 2.5 times more than what we were receiving in the first year. And by the 20th year, it's already 600. So if we invest money and if we reinvest due to compound interest on a long term, the money really, really grows considerably. So here you can see how the same, let's say 10,000 grows over year if they invested at 2% and 5%, 8 or 10. And if invested, for example, at 5%, which is quite acceptable investment rate we can get, then this money will double in 20 years. With 10, if you achieve 10%, it really grows really, really nicely. But even with 5% is much better than what we were talking about, the money which are actually just slowly disappearing with inflation. So it is important to invest to grow our wealth. Do you have any questions so far?
Not on my side.
No, okay. And and Tatiana, if you have something, you write, and so then I think I should see it also. So, okay, so how can we let our money grow? No, so that would be the question. The numbers look nice, but how can we do it? Well, what is actually investment? So investing is purchasing something which brings us a regular income, or something which we think will considerably increase value in the future. So this is official definition, and we probably all know it. But what are the popular investment assets? Popular investment assets would be stocks. No, what is let's say a tiny piece of a company. Another one are bonds. These are money lending instruments. We have to see it as us lending money to somebody and receiving a paper in return promising us to pay an interest. So we can have bonds issued by governments, but we also can have bonds issued by different big companies, like the same companies as Apple or Amazon. They actually borrow money and issue bonds. We have, of course, real estate. This is another good investment asset, but we're talking about investment in real estate when we buy property to be rented out. So contrary to, let's say, popular belief that if you own a house where you live, this is an investment. Lots of people say, well, I own my house where I live. Well, it's nice, but this is not exactly an investing because you don't receive any income from it. But if you have properties where you have rentees and you receive rents, this is a real way to earn money, and this is a good way to build your retirement portfolio. Other investment assets as art or investing in startups are possible, but I don't recommend investing in it for beginning investors. We all have to have different investments in our portfolio. We have to have and stocks and bonds in real estate in a certain diversified portfolio. But when we talk about stocks, there are lots of, let's say, different products and lots of ways to invest in stocks in a stock market. And I hear comments that people say, well, I don't invest in stock market because it's something very intangible. No, real estate is tangible. I'm buying a house, I can see it, so this is real. Stock market is not real. And also we don't exactly understand what it is. So for us, it's something something invisible, something intangible, we don't understand. So these are the reasons of not investing. And that's what I'm trying to explain in my courses, and that's what I try to explain, that stocks are very tangible something. It's possible and easy to understand how it works, and it's a very reliable way of investing your money. Investing in stocks of big companies and big corporations, we're pretty much investing in modern economy. And we trust in modern economy in principle. We work for the companies, we use the products, we understand how it works more or less. So being shareholders in big companies, this is part of our trust in the economy, and we will profit from it as well, being shareholders and receiving returns. There are lots of investing misconceptions, and I think one of the main misconceptions is that seeing investing only as a stock market and seeing stock market as this guy, as the guy from the Wall Street. And so we hear investing, we imagine the guys like this, and immediately we get this also ideas of well, they get rich easily, but it's also very risky, so they usually also end up badly, and it's not something for me. And this is I think the biggest misconception, because actually these guys, they are not real investors on the stock market, they are speculators. So these guys are traders. They speculate on the markets, they do some very crazy things. They're buying things and selling them within minutes. They do it usually with borrowed money, with borrowed products. So what they are doing, we as retail investors, we are not doing, and we are not going to do. So losing everything what you have on the stock market as a real, let's say, retail investor, is not so easy actually. So you have to do lots of stupid things to lose all your money. With these guys, they're actually not losing their money, they're losing somebody else's money, and lots of somebody else's money. That's why they end up very badly. But this is not the game we will actually ever enter. So there are lots of quite secure products there, which are easy to work with and which are not as risky as what we hear. And but it's also not easy to become rich. So I don't want to promise that investing in the stock market will make you rich overnight. no, it's a long road, and you have to learn things and you have to understand them, but it's possible to get reasonable returns and also to grow your wealth. Then there is another opportunity misconception that it's all about the right opportunity. So when you're looking for opportunities, it's difficult to find opportunities. So you're always waiting for the market to go down, for you to hear something very special. Maybe there is this secret stock, maybe there is something. This is also not true. And the last one, of course, leave it to the professionals. There are lots of people who really know what they are doing, so I will just give them my money and they'll do wonders with my money. And this is also not true. So the three messages I want to give and what I also work on is first, investing is about consistency. And here I show this picture of the woman, and she is running in a rain. No? So for me, investing it's a little bit like nutrition and like fitness. It's about the discipline, it's about consistency, about doing things on a regular basis. Like this lady, she's running not only when there are sunny days, but also when there are rainy days. So consistent investing and going through different periods, that's what brings you long-term return. Another thing about investing is diversification. So it's not about putting everything in all the eggs in one basket. You have to have a nicely diversified portfolio. Then if something happens with one asset, it's being compensated by the other asset, and that's why on average you get certain returns. If you risk doing something or buying only one stock, or if you are only investing in only one market, then it's indeed riskier. But if you diversify, then your risk decrease considerably. And finally, investing is something for the long term. So investing is not something to get rich tomorrow. So it has to be seen as a long term. And then actually today is as good day as any other day. So there is no need to wait for this magic opportunity, for this magic moment. It's about starting and doing it consistently, and that brings certain returns. And this is actually what I wanted to share today, is, let's say, explanation of the program and what we are learning, because the program is to learn and start investing in 5 weeks. Of course, we cannot learn everything in 5 weeks, but I think I'm able to transmit main ideas, explain main things about the stock market and products which are there, which we can buy for us to start investing. And then, of course, everyone has to do their homework also and to learn additionally. And hi, and this is Svenja, which joined us kindly because she attended the previous sessions. So she attended the previous investment accelerator, so she just came in. You're just perfectly on time, Svenja, to just give your impression why why you like the program so much that you actually volunteered to join today and to say why you like the program.
Hi.
Yes, yeah, hi. So I give the very short word to you because, well, this is, I just finished the whole presentation, so you can just say 2 words and go back to your busy life.
No, thank you. Yeah, I just wanted to, well, say that I like the program very much, especially because of the live sessions, because I actually normally, if I join a program, if it's only to self-learn, I don't do it. So I appreciate it very much to have fixed dates. Of course, afterwards, if I didn't, I can also still have a look at it, what you put in the classroom. But I mean, I personally like it more if it's live. And then I have to say that I really liked that you are like a little bit pushy. So I need that somebody always says, hey, how's it going? Are you, do you feel comfortable? Are you feeling, where are problems or something like that? And then the documents were good also to get an overview of your financial situation and then decide what you want. Yeah, what is the right, let's say, how can you say that, how you should start, where you want to go, and that it's the worst not to do anything. So that's my, yeah, and I also like that you answer all the questions fast, and if you don't know so much about something, then you investigate and that you share your personal experience also with what bank, what fund or whatever. So I like that very much, that it's very practical, and yeah, that's my question.
Wow. Thank you so much, Svenja. So it's very nice of you to come and share your experience. Svenja is, well, she lives here in Madrid. She is a lawyer and well, a tax advisor, not? Maybe you can explain yourself.
Yeah, no, just, yeah, I live here for 10 years now. I'm a lawyer in the Chamber of the Bar Association of Madrid, and I mostly have clients from abroad who either live here or have interests in Spain, so like real estate, or that they have to declare some kind of tax returns. And yeah, I mostly have foreign clients because I myself am from Germany originally, and so yeah, I'm used to reading double taxation agreements and something like this. So of course, yeah. Any question about taxes, I can have a look at it if somebody needs assistance.
Thank you, Svenja. And well, we see each other later on today, you know, Svenja. And thank you so much. I'll let you go. Thank you. Bye.
You're welcome.
Yeah.
Bye, and
Thank you. Bye. And I also Stephanie is leaving now, so she's also going. So I guess I say goodbye to Stephanie as well. And Tatiana, if you have more questions, then I'm very happy to answer. And otherwise, you send me a message. Okay, so Svenja, taking you out. Yeah, and Stephanie, so everybody went.